Hi, my name is Beau Wolinsky, President and CEO of KC Capital Management and the Kansas City Stock Exchange. I run a model on WorldCupAdvisor.com called QuantMaster. This model has been developed using efficient frontier analysis in Excel and multi-charts to build a model that trades NASDAQ 100 E-mini futures, corn futures, and gas futures. These futures are traded in a 2-1-2 pyramid of NASDAQ 100 E-mini, where two contracts are used on each pair's trade, where one ergodic signal augmenting the other adds another two contracts for up to 5 contracts of NASDAQ 100 traded at any one time, and trades 4 contracts and 1 contract of corn and gas respectively. These contracts have been developed specifically for trading per unit basis in World Cup Advisor and can be augmented by increasing the number of units traded.
Tomorrow on Squawk Box, we've got Jobs Friday. It is going to be a very big number.
The unemployment rate is expected to climb.
150, we like 150.
That would be a disappointment, I think, for the market.
I've been able to say 9% by the time of the election. Think they're right?
Squawk on the tweet as everyone talks about creating jobs. We're asking you to come up with a brand new occupation that could actually be useful here in the United States. B.W.O. tweets, new occupation of mine is price physicist. CTAs and fund managers would use them to arbitrage markets actively.
Wow.
It's very sophisticated.
Yes.
Paula tweets, getting paid to go to school and learning careers that are in need of employees. And Guy tweets, models posing a la Abercrombie & Fitch in front of health-themed eateries with signs, this is how you'll look if you eat here.
Well, are they big models or with washable stomachs like Abercrombie & Fitch?
Well, I mean, a la means in the style of Abercrombie, and they're all...
Oh, it's French.
Français, oui.
Hey, guess who's here? Carl Quintanilla makes a...
No.
He's here.
No, I know.
He's here.
Oh, yeah.
You were back. I mean, I had to come back.
Part 2A of Form ADV. Firm Brochure Item 1 Cover Page Text KC Capital Management Incorporated 212 Bluffwood Drive Danville, Kentucky 40,420-1 Area Code 85958399016. This brochure provides information about the qualifications and business practices of KC Capital Management, Incorporated. If you have any questions about the contents of this brochure, please contact us at 1 area code 85958399016 or email Wolinsky@kccapitalmanagement.com. The information in this brochure has not been approved or verified by the United States Securities and Exchange Commission or by any state securities authority. Additional information about KC Capital Management, Incorporated also is available on the SEC's website at www.advisorinfo.sec.gov. Item 2 Material Changes Text. There have been no material changes as this document represents our initial filing. Item 3 Table of Contents Text 1 Introduction to Material Changes 3 Table of Contents for Advisory Business 5 Fees and Compensation 6 Performance-Based Fees and Side-by-Side Management 7 Types of Clients 8 Methods of Analysis, Investment Strategies and Risk of Loss 9 Disciplinary Information 10 Other Financial Industry Activities and Affiliations 11 Code of Ethics, Participation or Interest in Client Transactions and Personal Trading 12 Brokerage Practices 13 Review of Accounts 14 Client Referrals and Other Compensation 15 Custody 16 Investment Discretion 17 Voting Client Securities 18 Financial Information 19 Requirements for State Registered Advisors. Item 4 Advisory Business Text. The nature of the advisory relationship between the client and KC Capital Management is as a duly appointed fiduciary, and we act with regard to advice sanctimoniously in accordance with our own personal recommendations. KC Capital Management, Incorporated was formed on January 7, 2007 in the state of Missouri, and is owned by Beau Wolinsky. Advisory services provided include investment advice related to the efficient allocation of a portfolio, and also offers additional opportunities in alternative investments, such as commodity trading advising. KC Capital Management uses state-of-the-art programs to aid in market timing, proprietary trading indicators and decisions, and allocation software subscription services that enable us to build a more efficient portfolio consistent with modern portfolio theory and the capital asset pricing model utilized in large portfolio management investment firms. KC Capital Management specializes in the following advisory services: portfolio management, retirement planning, financial planning, markup timing, and quantitative analysis. We design customized portfolios for investors using software from macroaxes.com and multi-charts. We also utilize WealthLab Pro for pairs trading, arbitrage, and in conjunction with multi-charts model managed on coverstar.com called quantitative ETF portfolio. We tailor our advisory services to the individual needs of clients, and we will meet with you to determine your investment objectives, risk tolerance, and other relevant information such as suitability information at the beginning of our advisory relationship. KC Capital Management is a newly registered investment advisor that we anticipate having limited discretionary authority to buy and sell securities. Our discretionary trades place the interests of our clients first and are designed to catch swings in market prices at optimal times. KC Capital Management plans to bill directly quarterly arrears and include breakpoints at levels we feel are consistent with fairness and profitability for our clients. As a new investment advisory services firm, we must disclose in our ADV Part II and in other documents how much assets we currently have discretionary and non-discretionary authority to manage. At this time we are a new investment advisor and have no assets under management, but we anticipate all assets managed will be done so on a discretionary basis. Advisory business definitions. Proprietary trading. Proprietary trading are any trades that KC Capital Management or any asset manager places for its firm's own benefit, and these trades involve analysis outside the normal allocation process used to create portfolios for clients. Modern portfolio theory, EXEMPT, refers to the efficient allocations of capital. When creating allocations for portfolios, EXEMPT uses commonly accepted model used in the financial industry to analyze risk in order to maximize return. Capital asset pricing models, CAPM, is the foundation of modern portfolio theory and is the basis of analyzing the trade-offs between maximizing returns while minimizing risks. It allows the advisor and investors to construct a portfolio that is efficient. Efficiency refers to the extent to which returns have been maximized for a given level of risk determined by profiling the investor's needs and circumstances. Pairs trading, the trading of instruments in which a correlation is identified and potentially allows the investor to see when ratios between two highly correlated securities are either overbought or oversold. Depending on the extent to which these ratios have exceeded their normal volatility thresholds, the advisor may wish to act on these changes by going long the undervalued and short synthetically or otherwise in the overvalued. Arbitrage. Arbitrage is the identification of securities misbreaking and steps needed to exploit that inefficiency. Item 5. Fees and compensation. Text advisory clients pay biannual 0.5 to 2% quarterly fees, with performance-based compensation comprising those accredited investors up to 20% pays annual with annual periodic reset. The minimum performance-based fee KC Capital Management, Incorporated may charge is 10% of profits. Fees include 0.5 to 1.5% deducted based on net assets under management and could include consideration to notional amounts wherein leverage is substituted for higher leverage products. Notional amounts mean that only what is required to trade in a commodity futures contract is needed to fund an account. However, the notional amount under management is usually higher than the minimal amount required for trading. We allow customers to invest only what is needed and notionally fund their accounts with the idea that the notional amount shall be billed as the underlying assets under management level. Billing for fully funded investment amounts are charged quarterly. An example of this arrangement might be an investor who wants to trade NQ** futures. NQ** futures at Interactive Brokers and elsewhere require limited amounts less than $3,500 to trade one contract. So if an investor came to us with a $50,000 account close to the notional value of the contract, they would only be required to fund the account with the amount necessary to purchase the contract. Clients may elect to have their account debited by the custodian for payment of fees or be direct billed for payment. KC Capital Management, Incorporated invoices fees quarterly and performance-based fees at the same time. For more information about our performance-based fee billing practices, please see page 6. All fees, including quarterly and performance-based, are negotiable, but still within the ranges provided above. Those ranges are from 0.5% to 2% annual fees paid quarterly, and a minimum performance-based fee starting from 10% to 20%. Additional fees and costs related to trading include commissions, electronic communication network fees, possibly, and certain miscellaneous expenses in addition to our advisory fees. No supervised person accepts compensation for the sale of securities or other investment products. Clients may choose their own broker, or they may elect to transfer assets to accessible accounts. In the case where new brokers are required, KC Capital Management, Incorporated prefers interactive brokers, but may trade immediately in TD Ameritrade and Fidelity Investments accounts. We do not offset commissions or markups when computing our advisory fees. KC Capital Management, Incorporated also receives income as a sub-advisor for Covester Investment Management, Incorporated on covester.com/KC Capital Management. We also can enter into agreements with other advisors wherein compensation from referred clients could be shared. For more information about our referral practices, please read item 10. Revenue from our quantitative ETF model at Covester is paid quarterly with a 50/50 split, and monthly subscription revenue on collective2.com is paid 45 days after payment starts and every 30 days thereafter. Please read item 14, client referrals and other compensation, for further discussion of collective2.com. We charge quarterly fees for our investment advisory clients and commodity trading clients with agreed upon performance-based compensation if the investor qualifies as an accredited investor. *NQ refers to the NASDAQ 100 futures symbol and is a futures contract with $20 per NASDAQ 100 point. Item 6, performance-based fees and side-by-side management. Text: KC Capital Management considers capital growth to be a high priority for every client. We determine performance-based fees based on agreed-upon percentages, starting at 10% and up to but not to exceed 20% in any case unless the client is an accredited investor. Performance-based fees may only be charged to accredited investors, and that may attest to qualify as an accredited investor written in accordance with SEC rules. An accredited investor must have income of at least $200,000 in the last 2 years, or a combined spousal income of $300,000 in the previous 3 years with expectations of similar income earning potential going forward. Any investor with liquid net worth not including primary residence and assets of $1 million or more qualifies to meet the definition of accredited investor as provided by the definition of accredited investor by the SEC. We advise our clients to use interactive brokers to mimic personal trades, and have formed a model investment manager Covester Investment Management corporate account. We place proprietary trades from us and sub-advisor at interactive brokers. This ensures well that discretionary trades are consistent with our supervisory responsibilities, as the trades placed in that account are then placed directly simultaneously in that particular investor's accounts. No performance-based fees are charged at Covester Investment Management, but quarterly fees are applicable and only accredited, eligible investors may opt to produce more incentive for the advisor to manage his or her account. Outside of these circumstances, such as commodity trading advising, the extent to which performance-based fees may be billed are determined by negotiation prior to the start of any investment advisory relationship, and are governed by the terms of KC Capital Management's contract. Performance-based fees as charged by KC Capital Management may go up to 20%, in which profits are split between the advisor and the client, down to a minimum 10% of profits. If elected by the advisor, annual resets will be calculated based on dates of inception. Using to simulate annual periods in the annual period, we charge every 6 months. KC Capital Management may have a conflict of interest arising from favoring accounts paying performance-based fees and for those accounts without performance-based fee compensation. Required disclosure. Performance-based compensation may create an incentive for the advisor to recommend an investment that may carry a higher degree of risk to the client. Item 7, types of clients. Text: each client can be grouped according to type of account. We generally address all types of accounts, from individual accounts, trust accounts, pensions, 401k plans, 412Is, retirement planning rollovers, Roth IRA, and covered Ls, which all require immediate attention and customized portfolio optimizations with the ETFs available at either Fidelity Investments or TD Ameritrade. We can accommodate and advise any size portfolio. KC Capital Management has no minimum portfolio size, however, most brokers do, and depending on the required level will be the same as the broker. Specifically at Interactive Brokers a minimum of $10,000 is required. For instance, $2,000 at both Fidelity Investments and TD Ameritrade. The minimum portfolio size may be different depending on the broker and type of account. Item 8 Methods of Analysis. Investment strategies and risk of loss. Text analysis related to equities index trading and equities trading related is general in nature, but may include from time to time entry at prejudged Pareto optimal points designed to minimize risk while adding to long-term results. We advise purchase of shares asterisk, and, where possible, commission-free shares. This security has a risk profile consistent with its model index, and is designed to mimic the movement of a particular group of indexes. ETFs may be more costly in terms of percentage-based fees, however, their functionality in providing efficient instruments to use for portfolio allocation is essential to building a properly diversified portfolio of these instruments. These methods can be classified as financial science, and these subjects involve capital management arbitrage asterisk asterisk, risk management arbitrage asterisk asterisk asterisk, pairs trading arbitrage, volatility-based overbought oversold strategy trading, and many other capital asset allocation methods designed to increase bottom-line growth in every account we are associated with. Arbitrage is the buying and selling of securities that have a perceived misbrooking. If our model classify a security as misbrooked, we will take a position to exploit the direction of that misbrooking. Our analyses utilizes software from macroaxes.com, multi-charts, and WealthLab Pro. Allocation decisions are made using efficient frontier analysis and portfolio optimizations from MacroAxes, which can be found at macroaxes.com. MacroAxes allows us to analyze the portfolio now, later, and, whenever needed, where it needs to be reallocated to in the future. Using quantitative analysis consistent with modern portfolio theory, we feel MacroAxes offers the best combination of suitability and allocation decisions. Investing in securities involves risk of loss that clients should be prepared to bear, and with that understanding several methods of analysis can be more generally summarized as asset management, which, obviously, does not guarantee against loss. The utilization of pairs trading, volatility overbought, oversold levels are designed to catch swings in price taken over a number of days, and are shorter term in nature. We have developed many techniques to allocate and modify our portfolios, but generally we have been guided by the use of trend-following systems termed price physics by its author. Price physics is a logical way to classify movements in the market. We can identify future price changes based on where the market has moved to and take positions in accordance with where we believe the price is likely to move toward. We classify our most likely profitable trading opportunities on lower highs and higher lows. We also may trade on breaches of these levels, but generally we see lower highs when the market may have fallen then rose but not exceeded its previous levels as opportunities to sell or go short. We also feel higher lows when the price has fallen but not went below the previous low, and we see that as an opportunity to buy or go long. We also see breaches of previous price levels as opportunities to trade on also. For instance, if we are making lower lows and not setting the higher low, we consider that an opportunity, though not as optimal as a reason to go long, and if we are making higher highs and failed to make a lower high, we see this as an opportunity to go short or to sell. Wherever the market moves to, we see the opportunity to take contrarian positions as probabilistic opportunities to trade on, and depending on where the market has been, we made the decision to invest in our assessment of where the market is likely to move to, and this constitutes our investment theses and arbitrage trading strategies. Asterisk shares are securities designed to track certain indices. They are generally cheaper instruments to purchase than building a portfolio out of all of the stocks in those indexes, and are perceived to be just as efficient when used in conjunction with active management as any other security with similar allocations. Capital management arbitrage is the utilization of capital to exploit securities misbrooking identified by our proprietary models. Where possible, the manager will choose which security is best able to exploit misbrooking. Please refer to our first continuation page for a discussion of item 8. Risk management arbitrage refers to decisions made by advisors to determine securities allocations. Item 9. Disciplinary information text. At this time, there is no disciplinary information to report. Item 10. Other financial industry activities and affiliations text. KC Capital Management is registered with the NFA as a commodity trading advisor and can't sell commodity futures contracts as a CTA. KC Capital Management Incorporated is a sub-advisor for Coverstar Investment Management, receiving a 50% split in quarterly management fees in the amount of 1.5% paid quarterly based on that annual percentage. We plan to spend around 60% of our time equally on managing our Coverstar Investment Management KC Capital Management quantitative ETF model portfolio and our IA asset allocation decisions. The remaining 40% is devoted to managing our CTA operations. Coverstar Investment Management is a registered investment advisor on file with the SEC. Fees paid to Coverstar are billed by this advisor at a rate that has been determined by both companies to be commensurate with the cost of managing the model. KC Capital Management does not charge any additional fees and splits revenue with CVIM. We will recommend our model on Coverstar.com if we feel that the client has sufficient resources to engage in the high-risk venture of market timing and risk score of 5 determined after collecting information about suitability. Item 11. Code of Ethics. Participation or interest in client transactions and personal trading text. KC Capital Management's Code of Ethics follows very closely with the Code of Ethics governing members and candidates of the CFA Institute, and derives our standards of practice from these models as well as follows. KC Capital Management's principles for employees and partners must act with integrity, competence, diligence, respect, and in an ethical manner with the public, clients, prospective clients, employers, employees, colleagues in the investment profession, and other participants in the global capital markets. We place the integrity of the investment profession and the interests of clients above our own personal interests, using reasonable care and exercising independent professional judgment when conducting investment analysis, making investment recommendations, taking investment actions, and engaging in other professional activities. KC Capital Management must practice and encourage others to practice in a professional and ethical manner that will reflect credit on themselves and the profession. KC Capital Management Incorporated must also promote the integrity of and uphold the rules governing capital markets. Finally, KC Capital Management must maintain and improve their professional competence and strive to maintain and improve the competence of other investment professionals. KC Capital Management's participation and interest in client transactions must be given priority over personal trading and investment in proprietary, personal, individual, or corporate accounts, and all investment actions that have a reasonable basis. As a fiduciary, KC Capital Management will always employ the standards of professional conduct, practices, and code of ethics set forth as written into all ethics-related issues discussed by members and candidates of the CFA Institute. Item 12. Brokerage practices. Text. Brokerage practices are very flexible, with preferences for custodian services by Fidelity Investments, National Financial Services, TD Ameritrade, and Interactive Brokers. Research and other soft dollar benefits. Brokerage for client referrals. KC Capital Management does not have any current research or soft dollar benefits from any company, and we have not acquired any products or services for us or related persons with client brokerage commissions within our last fiscal year. Brokerage for client referrals. We consider the needs and trade-offs of our clients between active and portfolio management when choosing which broker we'd like our client to move funds to. KC Capital Management does not consider client referrals in selecting or recommending broker-dealers. Depending on our analysis of the costs and benefits of the needs of the investor, we may determine certain brokerages who might have discounts on securities trading that would directly benefit the client in lower commission revenue. Cost is the main concern if we find that certain brokers offer discounts on the products we intend to have the client invest in. When we use client brokerage commissions to obtain research or other products or services, we may receive a benefit because we do not have to produce or pay for the research, products, or services generated by that commission. We may have an incentive to select or recommend the broker-dealer based on your interest in receiving the research or other products or services, rather than you the client's interest in receiving the most favorable execution. As a singularly registered investment advisor, We do not request clients to direct execution or transactions through any specified broker-dealer other than the ones with which we have accessibility and ability to place transactions immediately. We base the suitability of the client and their custodian on which securities we think are best able to accommodate our investors, and we do not have any formal referral agreement with any broker/dealer. Directed Brokerage KC Capital Management does not have any formal referral agreement with any broker/dealer, and we do recommend, request or require that our clients direct them to execute transactions through a broker-dealer because it depends on which products are suitable to the client after an assessment of risk, and which brokerage the client can obtain the best execution and discount on these products from. We do not aggregate the purchase or sale of securities because we do not have any ability to do so, and only the decision of which broker we refer our clients to may be a consideration in the allotment of shares that may be allocated across multiple broker-dealers than the one the client and advisor has chosen custody of fund for. Item 13. Review of accounts. Text review of accounts occurs periodically at least once quarterly, and is designed to update an investor's expectations and risk levels whenever the advisor feels any changes are required. Statements created by the custodian provide insight into the level of performance of each account. Depending on price action, markup swings of greater magnitude may prompt sooner attention than quarterly to each investor's account. KC Capital Management does not produce research reports, but may issue commentary related to news events around specific companies or about the implications of macroeconomic reports. We write blogs about these subjects somewhat extensively at themarketchatter.blogspot.com. If we think that there might be a better solution for our clients, we may elect to review those accounts sooner than once quarterly. We do not want our review of accounts to be any less frequent than semi-annually, as we feel that the investor may lose focus in why he made those investments, and feel more frequent reviews than annually or semi-annually produce the most optimal trade-off between trading and maintaining our investment theses. Item 14. Client referrals and other compensation. Text. Client referrals and other compensation may include subscriber revenue from membership sites, and we do try to encourage cross-selling any product that would be beneficially contributed by a relationship established by current clients with new ones. We may during periods of high growth wish to make our model more accessible to the investing public, and this is usually done through commercially available websites that allow you to track trades placed on a third-party network to track in a live brokerage account. Collective to allow monthly, quarterly, and annual subscriptions as well as free trial periods, pay for performance, and other fairly competitive ways of compensating the model manager for his advice. KC Capital Management receives compensation from Coaster Investment Management for attracting clients to subscribe to our quantitative ETF model. We split fees for this opportunity, and that is the extent to which we are compensated for providing investment advice to clients or compensating any individual or firm for client referrals to our advisory business. Item 15. Custody. Text. KC Capital Management does not seek custody of client assets. If you choose the option of having the custodian directly debit your account S for the payment of our advisory fees, this ability to deduct our advisory fees from your accounts causes our firm to exercise limited custody over your funds or securities. We do not have physical custody of any of your funds and/or securities. Your funds and securities will be held with the custodian. You will receive account statements from the custodian at least quarterly. KC Capital Management also sends out invoices quarterly. Please compare this invoice to the account statement for accuracy. The account statements from the custodian will indicate the amount of our advisory fees deducted from your account S each billing period. You should carefully review account statements for accuracy. Performance-based compensation may create an incentive for the advisor to recommend an investment that may carry a higher degree of risk to the client. Item 16. Investment discretion. Text. Before we can buy or sell securities on your behalf, you must first sign our discretionary management agreement, the limited power of attorney, and/or trading authorization forms. You may grant our firm discretion over the selection and amount of securities to be purchased or sold for your account S without obtaining your consent or approval prior to each transaction. You may specify investment objectives, guidelines, and/or impose certain conditions or investment parameters for your account S. Our decisions attempt to time markets for edge. Our techniques employed are what I refer to as capital management arbitrage and risk management arbitrage. The allocation of capital is central to the equitable growth of the firm's clients. And whenever we see an opportunity to enter the market, we will advise our clients to do so as well. CMA is the use of capital for maximum return, and risk management is the limitation of that return. Item 17. Voting client securities. Text client securities under custodians allow the advisor to vote for the investor in the event that that investor seeks permission to allow, and may include the possibility that such action may be ill-advised. KC Capital Management does not custodialize your assets, and, as such, we can only issue direct mail to our customers should they be mailed to our locations rather than to the investor. In such an event, we would forward these requests for voting to them forthwith, and not pay any regard to them other than to immediately process that as outgoing mail to the customer who evidently owns shares requiring shareholder voting action. It is not the firm's policy to vote for clients not wanting to do so themselves, and we will forward any proxies received and encourage our client to vote in the best manner they see fit. Item 18. Financial information. Text. We are not required to provide financial information to our clients because we do not require the prepayment of more than $500 in fees and 6 or more months in advance, or take custody of client funds or securities, or have a financial condition that is reasonably likely to impair our ability to meet our commitments to you. Item 19. Requirements for state registered advisors. Text. As a Kentucky registered IA, requirements related to the effective management of your assets is a top priority for KC Capital Management, and we are looking to offer the best advice that you can find in order to remain competitively liquid in any market you want to trade in. Please refer to items 5 and 6 for discussion of performance-based fees. The principal of KC Capital Management, Incorporated is Beau, the graduate of Center College, where he majored in financial economics, and has been a registered investment advisor representative since September 6, 2006. KC Capital Management's founder Beau is a level II CFA candidate and commodity trading advisor with the NFA. Beau attended Center College, earning a Bachelor of Science in Financial Economics and minor in Mathematics. In June of 2001, Beau was a Kentucky Governor's Scholar, earning the Brown Colonel Scholarship to attend Center College.